Welcome, welcome. Another episode. We've got a similar sort of vein today. We're going to talk a bit more about AI, and specifically in the context of a podcast that was recently put out by Mark Andreessen and A16Z, with regard to how it's going to impact industries and businesses going forward. And I thought it was really prophetic because, it's the perspective that they're taking, and put a link in the pod in the show notes. But really what it comes down to is, what is the prediction for how AI is really going to shape the commercial and the personal world? And one of the observations that Mark Andreessen made is that technology in the last, let's say, 10 years, 10 to 15 years, has really taken a shift from being essentially a tool or businesses developing tools to assist other businesses, the incumbents, let's call them. And it's shifting towards technology companies that are partially fully integrated, or they're sort of beyond just a tooling company, and they're actually competing directly with incumbents. And he makes an interesting point, which is that using an example like Uber. So if Uber were to have been created as a tooling company, so essentially it would be dispatch software for existing taxi companies. If that were the original play, we likely wouldn't see Uber the way that we know it today. Essentially, would the incumbent adopt those the tools and the software as it's been built to create the similarity of an Uber? And he makes the argument, and I think that's accurate, that we wouldn't see that. And I actually see that, and I'm curious your guys' thoughts as well from the insurance perspective, because the amount of effort and time we've put into insurance tools, it's very clear that the incumbents don't necessarily have the same vision, and in many cases they actually are quite resistive to adopting changes and adopting new tools and so forth. And so, as the creator of a tool, the vision that we would have for how that process or how that industry would work is very rarely consistent with the incumbent insurance company that we're selling that tool to, or even the user that ultimately is buying the insurance. So it's quite interesting, and it begs a larger question for us to talk about today, which is what do we see in terms of those changes? So in terms of the personal usage of AI or personal usage of technology as it relates to our work life, our personal life, our family, education, healthcare, stuff like that, do we anticipate it dramatically changing our own personal behavior? And if so, how? And how can we, as small business owners and entrepreneurs and people that are having to push that innovation, how do we get ahead of the curve, or how do we prepare our businesses for that future in a way that we can take advantage of that? So I guess first off, Michael, you mentioned you've started listening to it. What are your sort of top, what's sort of the initial takeaway from it?
Yeah, I think it was a really interesting one, and I'm glad you chose that as a topic, Kyle, for this week. And we're gonna get like really a good array of opinions in this room because Kyle's working on a company right now that provides that tool. So he has a tech stack that provides that tool to some legacy businesses that don't necessarily have those tools to operate their business as efficiently and effectively as what Surest can bring. On the other hand, on the other side of the coin, we have Boardwalk. Boardwalk has built the technology from the ground up. So we're kind of like that full stack example. So they talked about that in the podcast. They talked about exactly what Kyle said, how initially the big push, all these companies starting up, or the strong majority of them, were developing tools using technology that can be purchased, licensed, SaaSed out by other companies. But now the latest trend is they're seeing a much larger push, especially with the advent of AI. I think that's the big thing, right, Kyle? That AI has changed the landscape, and now you're starting to see these companies that have technology embedded into them, right in the DNA, springing up. But I think the big barrier, and they mentioned this as well, with trying to get a company to adopt technology. So they talk about these full stack companies. Let's think about an insurance company or an insurance brokerage. These are two types of, operating full stack companies. They do everything from end to end in their space. The challenge with them adopting technology is the culture. I think that's one of the biggest hurdles they have. There's a number of hurdles, but in my opinion, technology is for many is a big obstacle, and they don't necessarily have the culture to be able to adapt the technology. They don't believe in it. Maybe they don't believe in it. Maybe they're underutilizing it. Maybe it doesn't mesh well with their overall workflow. Therefore, they're not extracting the most value of that technology, or it doesn't line up with something else in their process. So I think that is the big challenge. So we're at a point now where we have to, talking to our audience, you have to ask yourself, are you developing technology? If so, how is that going to fit in your customer's business, and how are you going to get them to maximize the adoption of that technology? And if you're building a company with technology built into its DNA, such as Boardwalk, how are you going to be able to compete with some of these legacy companies that have this full stack size and scope, and where you're trying to disrupt that with technology, not necessarily the market share, but trying to attain that market share with technology. So that was really interesting to me. Like, I thought that was cool. So this is a good segue to talk about that in this room. Andrew, would be really curious to get your thoughts on it. We've built technology from the ground up in the beginning, but there's also, there's challenges, opportunities, and challenges on both sides. What do you think?
Yeah, well, I think you brought up a very good point there, Michael. There's definitely a lot of challenges in building the technology from the ground up because of you essentially slow down I guess, the ramp up of the business, right, to generating revenue, because some of that energy and time has to be allocated to building up the foundational system and infrastructure to support the business, which is going to take up a lot of time. So I remember for us at Boardwalk, the initial year was really tough because we're essentially building out that whole system and infrastructure that no other brokerages has to go through. They would just simply pick something off the shelf and just run with it and build up the brokerage. But Michael and I, when we started it, I thought the important thing was we have the underlying foundation built for the adoption of new technology. And when we first started, we didn't really anticipate that AI was going to advance this quick, and for us to be here today, where AI is a big topic in a lot of businesses, and businesses are trying to figure out how to implement AI into their system and workflow. We didn't have that vision. We didn't think about that at the time, but because we built the system from the ground up and we have full control of our data, the system, and how it operates, we are now capable of implementing AI as it starts up. So it's that advantage of being a full stack, from basically from start to finish, having ownership of that data, having ownership of that system, really helps the business now, right? It really helps
So
the business.
one
Yeah, go
one
ahead.
question I would have, Andrew, is, as a well, let's say a full stack operator. So you're essentially a business that you're not just building tooling for a third parties. You've built an existing system for yourself, a proprietary system internally for yourself. It's interesting because I do think that with the advent of AI, and we've even seen this internally, it becomes a lot easier and cheaper and faster to develop those tools. And so I think one thing that is inevitable is that, on the one side, the SaaS companies or the tooling companies like us are, sort of saying, well, you guys aren't, executing on the tooling the way that we anticipated that you would. So should we be broadening? Would be heading towards that fully integrated model? Inversely, there's going to be your guys' perspective, which is saying we actually don't need the tools because we can build the tools better and faster ourselves. And so the innovators sort of push is to say, we see this sort of, brave new world as the incumbent, let's call them, because you guys aren't really an incumbent. You've approached this from a very novel technology focused starting point, which isn't what the traditional incumbent is doing. And I do think that caters towards what Marc Andreessen was saying, which is his example was the public company, the S&P 500, which is like less than 10% of the S&P are really actually pushing the ball forward. Like, everyone else is just trading on essentially reputation or existing products and services. And there's very little appetite, finance wise or otherwise, that for them to really take risks and make investments. Whereas you guys and us and every other smaller company, that's a requirement for survival. Because in order to compete and win, you have to do something differently. You have to innovate. You have to do something, because you can't trade on, reputation in existing business, because it doesn't exist. And so I guess the question for you is, do you see a point in time where you, as the, let's call you the ultimate buyer of some of these tools, like whether it be finance or, I don't know, banking, software, whatever, you would essentially say to yourself, hey, we're going to be fully integrated, rather than actually paying for an accounting software. We're going to build our own, and we're going to integrate it with all the other tools that we've already built. It reminds me of Tesla, because Tesla is a really unique example in the industry space, where they've essentially built every single piece of software that they use, which I think is the only company I've ever heard that has done that. And that includes their insurance, because they have essentially captive insurance operations for their vehicles. They've built like everything ground up, which is pretty shocking. So do you see that happening for you guys?
I think there's certain services that we would utilize and integrate into the system. However, I think at the end of the day, is what really matters is, are we? I always ask myself this question: are we delivering the best possible experience in terms, for the user, right? Are we optimizing some aspects of the business, with this feature? Um, I don't foresee us building out everything, and we don't want to, because listen, it's just gonna slow us down. We want to, if there's an existing technology that exists out there, we want to use it. But the question is it going to be something on the back end, or is it going to create a new user interface for our user to use, right? If it's something on the back end, I would love to use it, because listen, we can put together a nice UI, and integrate that right into our flow, right? That's the ideal. So to answer your question, Kyle, like, we don't want to build out everything. We want to use other technology and other companies or startups that have great ideas that might be better than ours, and they have executed on this thing flawlessly. We want to use that, but the core technology, the things that put everything together, and that's the system we call Harbor, is meant to put all that together. That's something that we're always gonna be focusing on, because think of Tesla. All of their software is to enhance the driver's experience, right? They have other software that plugs in there. They didn't build Netflix, on their theater, their offering. They plug right into to Netflix, Disney Plus. These are additional services that enhances the driver's experience. So for us, it's the same thing. We always ask the question: are we enhancing the brokering experience for our brokers, right? And if it does, we'll use it.
hmm So I guess a question for you, Michael, like you mentioned I guess the gap between like what a business is actually investing in and building and what the customer experience is. What do you see in terms of, the difference between, as I would describe it, as building demand and catching demand? Or, essentially you've got a novel concept for the end user. Like, I'll give you an example. So we're seeing right now, obviously, this big push from a lot of the large technology companies that have developed AI tools to start monetizing those tools. And I'm one of the biggest proponents of AI ever, but I still don't like the thought of saying, here, we're going to start charging you more for existing services because we're going to tack on an AI element to it. If I don't see any value from that AI, I don't want to pay for it. Inversely, if I am getting value out of that AI, I need you to show me, or I need to actually go down that discovery path of figuring out what that value is, and then attributing or assigning a value to it that I'm prepared to pay. And so how do you go from where we are today to saying, here, customer or prospect or industry, here's the value and here's what it could be worth, and here's how we monetize and charge for it, or here's how we get the end user, the customer, which is ultimately who everybody should be focusing on, to Andrew's point. How do we get them interested in actually paying for this integrated offering, rather than the incumbent that's tacking on a couple tools and doesn't really have a big vision for the future?
Yeah, and that's $1 million question right there, Kyle. I think that depending on the industry you're in, I guess I'll speak to our industry, but you have to kind of look at how we look at it. We look at it from a lens of where some of the bottlenecks in the business, and in terms of the customer experience. So we found, I'll give you an example, and this can be applied to different industries in a number of different ways. But for us, we found that clients weren't necessarily getting as exceptional of an experience from their broker as they could be. We interviewed hundreds of clients over the course of many years, maybe thousands over the course of our span in the industry, and there was a lot of frequent pain points, such as they couldn't reach their broker, or they would see their broker at the start when they signed up, and then they would never see them again, or they'd hear from them once a year. Or the policy, their broker would place a policy and then they wouldn't remarket it for many years. And I'm not going to get into the details of why that happens, but and then we started surveying the brokers, and we found the disconnect. The brokers had very little time to allocate to their clients to manage the actual policy and manage the actual relationship, because they were so bogged down with the back office processes and just really inefficient and out of date processes and systems and tools. Like, we're talking, operating on systems that were around, and Kyle, in the 90s. And processes that never have been refined with a lot of these legacy brokerages and legacy insurers. So that's kind of like, how we saw technology solving that problem for our customer. We saw it as, let's use technology, let's build into the DNA, let's build it in from the beginning, so we get the buy-in from the brokers we're attracting. Because if you attract a really good broker, but they don't utilize these tools, it doesn't really solve that pain point. So we can give this great broker these tools, but if they don't use them, they're going to continue to deliver the same level of experience and experience those same friction points with their clients. So we wanted to do it in-house, so at least we can, it's embedded in the DNA. And now we're attracting these type of individuals that, from day one, they're leveraging these tools. They're leveraging them, and they're using them to deliver that exceptional experience for their clients, because now they have these tools. They know what they have them, and they've adopted them, and they've accepted them. And now they're able to deliver that experience to their customers where, hey, they can have more frequent touch points. They can go on more frequent calls. They can remarket the policy a lot easier if needed. They can manage the life cycle of the client and all the changes a lot more effectively. So really, how we saw technology, that's kind of why we chose to embed technology in-house, Kyle. But like, to Andrew's point, we'll still purchase technology off the shelf as long as it fits into the model and fits into that user experience for our brokers. The first experience is for the brokers to deliver a better experience for their clients.
Mm-hmm. Yeah,
There's a lot I can go deeper on that, but I just don't want to go too much on the
that's
tangent.
good though,
Yeah.
Mike. You brought up a good point. Exactly what we talk about all the time. Listen. There's going to be a lot of companies, Kyle, that will utilize AI to bridge the gap to eliminate humans out of the picture. But we see this as a more of a human in the loop process, right? Like, the humans will always be there, the brokers will always be there to deliver that experience. Like, you can automate and you can create self-driving cars as much as you want. You still need that car, that vessel, to bring the person from point A to point B. That vessel can never be replaced. We believe that the brokers are still going to be required to deliver that personal experience to the type of clients that we deal with. So that's why, to Mike's point, is to enhance their capability and really augment their ability in the system and make them more efficient.
And one thing I forgot, and this is very important because it answers Kyle's question, was, yes, we're doing all that stuff, but then you have to measure, like Kyle said, we have to measure the success. So you have to identify a few KPIs. For us, in that scenario I gave you, it's retention. Retention and growth in terms of premium growth. So can that broker scale their book up faster because now they have more time? By what percentage can they grow their book by versus without these tools? And what does the retention look like? Is their retention X% higher than a traditional broker that doesn't have access to these tools? So that is a work in progress. Andrew knows I'm passionate about that. I'm always asking for, how do we measure the success? Let's measure the success. It's challenging when it's in a small environment, like at small scale. You have to realize we have 6 producers, so we can measure it with 6 people, but there's so many variables. Without a huge sample, it's very difficult to fine tune those exact details, but we're getting better better at it. Every month, every year, we get better at figuring out like, okay, where are we moving the needle with this new feature? Andrew rolls out a feature. How is this going to translate, like you said, Kyle? How is this going to translate to business value? And that's challenging, but it's a work in progress.
So I guess one thing, like just to play devil's advocate, you guys obviously are working in a market, in a segment of the market, I should say, where the customer wants that level of human to human interaction and responsiveness, and they want to be able to pick up a phone and talk to somebody. There's definitely a certain amount of the market, different lines of insurance, let's say, or smaller, more personal lines, where, we've used the analogy before in the past where the market is kind of either you're going in the direction of the Amazons where it's highly, cost focused and there's very little interest or provision of, services, stuff like that, especially human to human interaction. Or you go sort of the opposite, which is the boutique, small, the Gucci store where it's very, very high touch, high, customer service orientation. However, the inverse is that you have less selection and less savings. So the cost is considerably higher. So what do you think? And right now, my, sort of objective viewpoint on the industry is that it's still at that point where it's trying to do everything for all people. There's really not a very clear divide. And, personally, if I wanted a high touch sort of experience, like you say, I probably would struggle to find that Gucci experience. Inversely, if I wanted the Amazon experience, I would also struggle to find that, low cost, high volume, high automation type, click out, checkout sort of experience. So where do you see, I guess, that that change occurring if it is going to occur within the insurance world? And how do you guys see yourselves fitting into it?
Yeah, that's a great question. Andrew, you want to take a stab at it? But I'm going to just start by, I agree, Kyle, like companies need to make a decision whether they're going to offer a commoditized product, like at scale, they're going to be an Amazon or a Walmart, or it's that Gucci kind of boutique experience where they're giving that experience that clients crave. These are two different types of clients, two different types of products, but you're right. A lot of companies get caught up trying to serve both. And even Alex Hormozi talks about this a lot, and they do neither well. They're just doing just like the department store example we gave last week of Hudson Bay closing down. There's so many department stores closing down in the US because they just did everything well, but nothing great. So start leading into.
And one other point to make, just interject here quickly, is from my experience on the broker side as well, I think it's equally difficult for businesses and for suppliers to identify which they are and then actually force it or at least be consistent. So there's a lot of customers who want the Gucci experience with the Amazon price tag, right? Mm-hmm. We all do. But the reality is that if you're going to be, essentially providing that upper level of service, there needs to be a cost. The customer needs to be aware that there's a cost associated with it. I think one of the challenges that we see in that sort of department store era that insurance and many other industries are still in is that all of the competitors are trying to do both, and they're trying to sort of undercut each other. So we're going to do more. We're going to offer as much service as possible, and we're going to have to be as cost competitive as possible because that's what the customer is expecting. Whereas if we sort of did a better job of demarcating that marketplace, the customer eventually would get to the point where they say, okay, I understand that if I want this experience, I have to be paying a premium. And it's ironic because the insurance people that have worked in the industry will know that of certain markets, right? They'll know that certain companies will provide a more substantive product, but it's going to cost more, right? It's really easy to explain that. Whereas if you didn't know that you didn't have that knowledge, you wouldn't know one name from another or one product from another. So I think that education process as well has to shape that demand. But yeah, what are your thoughts on that, Michael or Andrew?
Well, I think I think everybody, like to me at least, I think everybody wants that Gucci experience or Louis Vuitton experience. It's just difficult to deliver because of the high cost, or at least the illusion of high cost, right?
But do you want that for when you buy groceries?
I would, yeah, of course, definitely, I would like that.
Okay.
I would like to shop at like the Whole Foods, like of course I want that experience because listen, the higher end grocery stores, you go in there, your foods are selected, the meat are high quality, the fruits, every single fruit I pick up there will be of high quality, and I put in my shopping cart, I can pick anything, right? That's the experience you want at a grocery store, and that's the high-end grocery store experience. And I think everybody wants that. Like, why would I want to spend time searching through a pile of oranges to look for the best orange when I know that an orange I pick up is the best?
So what if you couldn't get organic oranges and Whole Foods wasn't selling oranges as a result, and you had to either buy
It's
oranges
not.
at the big
It's not.
box retailer that had the selection and the low cost, or the high cost, high touch, but far less selection, less
Well, it's not so
predictability?
much selection. It's more of the experience. The fact that I can walk into the store and know that everything I pick up is of high quality, that's essentially what I want. Like I might not want the best selection, but I know here I'm walking into this place. I know they sell the best oranges and the best mango. I can pick up a box of mango and it's the best mango I can get from any store. That's the experience I want. And if you think about it, many of the most successful companies out there, like Uber, for example, everybody wanted a personal driver. I've wanted one for a very long time. But you know what Uber delivered? They've delivered a personal driver to my door on request. That's the experience. That's why, I think Uber is so successful because of that. Is that it's fast, it's quick, it's personalized, right to my door at my request. So
It's
they've
interesting
really
you're
brought the cost down.
Yeah, he's looking at it from a different lens. Yeah, because
because
you're probably looking at it from the convenience lens
yeah, because
and
Uber is
from
not
experience.
Uber is arguably the Amazon, right? Because you're not ordering a black car, right? You're not, you
Good, you have
can
that
on the
option.
app, you have
Yeah,
the
you have
option,
to.
but let's be honest, like if you built a personal relationship with a chauffeur, that's going to be a far more Gucci experience than Uber, right? You're going to be on a first name basis. He's going to know your kids' names. He's going to know everything about you. You're going to pay a premium. You're going to get a better product, but you're going to have less selection, less availability as a result. And it's probably not going to use an app. It's not going to be convenient. It's definitely not going to be instant. And so
But
that's kind of the demarcation that it's likely to go. And I think the Whole Foods example is difficult because I agree with you on the quality perspective, but I still don't think that the selection is there. Like if again you're comparing it to the equivalent of a Walmart or a bulge bracket grocer in the U.S., like there's absolutely no contest in terms of selection. Like you go to one of these large, we'll call them big box stores, even though Whole Foods is not small. They sell a large amount of products that Whole Foods would never touch. And partially you would say, well, because of quality or because of this. But again, if people are buying on cost, if there's other considerations, and again, I think in order for this sort of analysis to stand up, we have to accept that Whole Foods won't sell certain types of products if it
I think
exactly.
doesn't
we're
meet.
yeah.
Yeah, and
No, you're right.
that's
And I think where Andrew's trying to go, Kyle, is he's saying that, you know what, people would love that experience, but they don't want to pay for it. Like you said, most people don't want to pay for it, or they'll be willing to pay for it if it's something that's near and dear to their heart or something that they're passionate about. The issue is with insurance, insurance is very low on that totem pole of, value in their mind. So it will require a fundamental shift in the industry and in the consumer, because right now I would say the strong majority of the population views insurance as a commodity, like you're talking about. It's a commodity. I have to have it. I don't want it. I don't like it.
Mhm.
And they're looking at it like the Walmart, and I just want the cheapest price, the easiest thing. However, they would like that boutique. They do want that boutique experience. Actually, they don't want to pay for it. So
Right.
yeah, let's get back on track with how can we give them this experience. You know, either and have them pay for it. So one side of the coin is Kyle's perspective. Hey, you want this experience? We'll give it to you, but there's a cost associated to it. And the other side, I don't know if Andrew, you're going down this road, was, hey, we'll give you this experience, but we'll find ways to make it, cost effective.
Yes,
Is that where you're going, Andrew?
exactly, exactly. So you basically bring the luxury experience cost down and deliver to the larger mass, and that's going to be your advantage. And
Are
to
there
be
any
honest,
companies doing this that we can compare
I,
to?
something I was going to bring it up. I think the Canadian banks are doing exactly this. You see TD. it's more like day-to-day banking. Their focus is day-to-day banking. They don't do a very good job at attracting high net worth clients and private wealth. Those divisions are quite small at TD. But you look at RBC, or BMO, their day-to-day banking is not that exceptional. In fact, whenever I walk into a BMO branch, it's not that good. But their service, their tech offering is quite lacking in some cases. But their high touch point, they assign somebody to you. You have that boutique service, but you can only get those at like RBC and BMO,
Okay, let
right?
me ask you now a question, Andrew. The fee structure, is it different between RBC and TD
The
and
fee
BMO?
structure, yes. If you're basically classified into a higher tier, but people are willing to pay for that additional service.
Okay, so yeah, they have to be willing. So they have to be willing to pay for that experience. And it's true. Like we used to bank with TD, and then we got to a point where we wanted more boutique service. So we looked at these other banks where we could get that, but there were higher service fees on the account. So we saw the value in paying for that service. But how do we get customers, insured, to see the value in paying for that high
Well,
touch
they're
point
more
service?
sophisticated clients, right? They're more sophisticated and more complex things that they have to take care of. So that's why they need the additional support. Whereas day-to-day banking, you're just doing like, your regular bill payments and so on. So it's not that complicated.
But do you guys actually consider the big five to be high touch? Like, do you see that that's like low value, high cost, high premium? Because I see the opposite. Like, if you look at, for example, what some of the fintechs are doing with open banking or trying to do with open banking. So one of the local leaders here is called Neo, and they're through and through a technology provider, and they've had to jump through hoops. From what I understand, they've had to jump through hoops and a lot of the financial industry regulation in order to try and offer products that large incumbent banks offer. And their fee structure is totally different. Like, it's entirely free. There's a bunch of rewards. They make setting up accounts and changing things and essentially, operating an account very, very easy. And it's all done electronically through apps. So that's that sort of automated, Amazonification, if you like. And they don't have branches. And the people that are doing it don't want branches. I think, again, personal experience, like there's a certain customer journey where that caters to that. I think I have even bigger issue going the other direction, where if you look at the big five, they don't innovate. Their service offerings are terrible. Their branch experiences are terrible. You try and update your mortgage, or you try and change something you've done. You have to make an appointment. You have to go to the branch. You have to sit down with someone that has absolutely no idea who you are. You've never talked to them. They've never looked at your file, and you start from scratch every time. And you're
Personal banking, yes.
you're paying more and more in fees. And the thing isn't, to go to the private banking route, like, yes, you could set up a private investment account, but that person isn't going to be doing your mortgage, right? Like, we don't have
They'll have a team. They'll have the people that do it. Like, it's a different experience when you go to that business or private banking. They give you a different level of service. You're right. There's no automation. The technology is lacking. But they do that kind of Gucci experience where it's like, hey, here's my team. We're all here. Oh, you need this. They bring that person in. You need that. They bring this person in.
But why do I need a team to renew my mortgage?
Because they're gonna get you the best mortgage renewal rate.
Well, why can't I do that for myself? If I look at an app and it tells me 10 different rates, why do I need a team
You're
to tell
definitely
me?
not our ICP, Kyle. You're definitely not our
Oh,
ideal
like
profile.
my question to you is, you just said the experience was horrible going into the branch and sitting down with someone who has no idea what's going on. That's the problem, Kyle. Like, let me tell
Give
you,
me an app every day of the week.
get you somebody that will take care of it for you. Again,
Don't want them.
He does his own taxes, Andrew. Kyle does his own tax. He files his own taxes. You
Well,
and
you're
Kyle are
definitely not
different
the
players.
ICP.
Kyle wants self-serve. He wants technology. He wants to interact with technology as a consumer. Andrew doesn't want to interact with technology. He wants that Gucci experience, hands off. I'm going to come in, open up a bottle of Perrier for me, and bring me the product and advise me on what I need. You're the expert.
So here's an example. Okay, so coming back to the Amazon model, so we got two kids. We were playing a game, getting organized for camping, getting games organized, and we didn't have enough dice. And so what the options that I had were, I can go to the Gucci experience and I can pay a premium and sit down and take time out of my day to travel and go look at a couple different dice and spend a significant amount of money on dice. Or I can go click, click, click on my phone on Amazon and buy dice that are here tomorrow morning from a
But
huge selection. Like there were probably thousands of different vendors from all over the world selling
um, I love
every type
that.
of dice I could imagine.
I love
I
that
agree. I agree.
experience.
In that
I love
instance, you need.
what you're saying about the dice and having the convenience to purchase the dice anytime. But for me, like Mike knows, I don't even want to go on that app if I don't have to. If I can just say, hey, you know what? If I like, listen, if the closest thing to that is AI, where I can just say, order some dice to my house. Okay,
Right.
that's
And somebody physically delivers them to your house. Okay.
yeah. But I don't want to interact with applications because, Kyle, you're right. If there's one application, two applications I deal with in a day, great. But when you start dealing with like 10, 15 different applications, it's just way too time consuming. I need something that ties everything together. I need something to tie all that together and operate all these applications for me.
That's a good point,
All
actually, because now there's an app for everything. Andrew's right. Like it is getting a little overwhelming. If you look at your phone and you see how many apps you have, it's overwhelming. You have like
Okay.
three
So
apps for chat, one app for wallet, these three banking apps, an app for Uber, an app for Amazon. It's crazy. Your
would
controls,
you
your Nest.
would you pay a concierge, like an individual human being, that you would pay and call them to manage your apps for you? Or would you pay to have an app that manages your apps for you, or an AI to manage your apps for you? Because this is the thing, right? Like you're essentially
AI.
saying, here's the problem.
I love the AI. I would love the AI. If the AI can do it, I would definitely love that because the AI can work 24/7. But if the AI can't do it, the next best thing is the person.
Okay. Interesting.
And
Right.
there's different. It depends what the product is and the buyer. Like for dice, you're right. That's commoditized. Like you just want that done. But like insurance, let's bring it back to insurance. People view it as a commodity, but if it's a large corporation that's managing, millions, hundreds of millions in assets, and they have equipment, they have property schedules, they have all these liabilities. I don't think you want to go
You know,
online and place your insurance.
I'll tell you my fear with that is that, for lending, for example, my biggest fear with using any application, any kind of software at the moment is the poor underwriting that they put in place. On the UI, right? They try to make it fast, they try to make it simple, but instead it backfires on me, say at closing, right? Like say I'm getting a mortgage and I find out last minute that some underwriter, some human underwriter picked up this file and says, hey, you know what? We're not comfortable with this. That's the fear I have. I want the experience I want on lending is the same way I want on insurance. Is that if I ever have a claim, I know that it's going to be paid out. I don't want the headache. I don't want to find out that last minute that I have a massive co-insurance on me, or if I have a claims denial because I never reported something correctly, or I accidentally gave some information that's incorrect. That's the fear I have with dealing with automation in that front. So dealing with a person gives me that additional comfort. So it's just a matter of comfort, dealing with the individual. But the individual now becomes overwhelmed because all the information they have to deal with, and that's what we're trying to do here at Boardwalk, is to automate that as much as possible while still delivering that comfort and that trust to our customer.
Ideally, there's a marriage, Kyle. And even with what you're doing, there has to be some kind of marriage. There has to be some kind of level of automation and self-serve capability so clients have speed and convenience, but there also has to be, as Andrew mentioned, a human in the loop if it's a sophisticated purchase. Or a high value or sophisticated purchase where you have someone there with you, or an AI that's phenomenal. But AI will get there; it's just not there yet.
I just think we're gonna be faced with more sophisticated consumer with the advent of AI. We're gonna have smarter buyers. So our brokers need to become smarter and better and more efficient to deliver to these more sophisticated buyers because they're gonna become much smarter. Think about it. The instant I get like some notification on something to buy, I go to AI, or I go online, I search up something, and instantly AI is going to give me a very sophisticated answer. So you're going to get much more sophisticated buyers in the future. That's my opinion.
So I have I guess a corollary to that. So the example was there's two types of buyers using insurance again. So the two types of buyers are the unsophisticated buyer that says, I'm primarily buying on cost. I see this as a commodity. I don't really care about any of the things that, somebody in the industry would care about, the sophisticated buyers. And they are looking for a fast and easy solution, cheap solution, right? And then you've got the opposite, which Michael, I think you described it very well, which was a large company that is very sophisticated and understands, where the levers are, what they need to manage, what their risk exposure is, all that kind of stuff. And they're typically heavily involved and heavily invested in the process of insurance. And so they typically would look for those high touch personal relationships. They do a lot of vetting with who their trading partners are. They know, policy wordings and all of that kind of stuff. And so Andrew mentioned obviously that I would agree that the perception is that the customer is becoming more sophisticated. Now, would that not require inevitably that customer that's saying, hey, I want to buy on cost, I'm going to rely on some AI to educate me or to tell me the things that I don't know, essentially, again, creating that demand for the high touch experience, because otherwise they were to say, hey, this doesn't matter to me. This is a commodity, until they get to a point where they're being educated and they're being informed of this is the downside of doing that, right? Like you've got insurance company A, B, and C, and they're all priced accordingly. Like A is the most expensive and C is the least expensive. If they don't understand and they don't know the differences between those three companies or the three products or services that they sell, how are they going to be able to make a decision to do that? And I guess the corollary of that is, if that is provided by AI, whose responsibility is to build that AI, or who is ultimately educating that consumer?
Well, their first instinct is gonna just be like all of us, is to to run to Gemini or ChatGPT or whatever and use it, and then it's up to us at that point to validate and verify that information if it's true or not, because they're gonna ask us much more complicated questions, right? Like, and I don't think it's just gonna be around premium anymore, right? And it's going to be more about like complex matters that we probably wouldn't get if there wasn't any AI in the picture. So I think it's going to be more around that education. AI is probably going to educate them a bit more, and allow them to ask better questions than just what's the price.
So who builds the AI?
The AI, you're talking about who build the AI for the consumer, or the AI for, okay, the AI for the consumer would just be like ChatGPT or whatever the
Saying they're
consumer
using like an LLM
Yeah.
model.
So
to
essentially
show.
a broad, like like you're saying, like ChatGPT, Gemini, the large foundation models are essentially, people are going to be using them to educate themselves. So what is
They
the
already
impetus?
are. They already are with everything else.
Mhm.
So how, okay, so then this is interesting then. If the foundation models are ultimately going to be educating the consumer, how do you guys fit into that workflow? So they're essentially going to be talking to ChatGPT because it's cheap and easy and accessible. And then they're going to say, oh, well, I need to buy an insurance policy with these things in it. And I know
Mhm.
what to look for and what not to, what do I want to avoid? How are they going to then go from that customer journey to the high touch, we'll call it high street experience?
At that point, it's going to be, in my opinion, harder to gain the individual's trust, because you have to be smarter. You have to be knowledgeable. Your workforce, as a broker, you need to be more knowledgeable and be able to educate them with something more than what this AI is offering, right? And that's where the person really comes in and really add that additional value and giving them that comfort. Like, I'll give you an example. If you came to me with very sophisticated questions on your particular business and you run through ChatGPT, and I'm like, Kyle, I'm not sure. I got to get back to you. That's just something I'm not comfortable with answering right now. You're gonna lose faith in me. You're gonna lose trust in me. But if I'm capable of at that point, and I have to educate myself and bring myself up to speed to be better than what the AI, or at least on par with that, then I can gain your trust at that point. Then you're like, okay, Andrew checks all the boxes, mentioned most of the things that the AI has mentioned, so I'm comfortable with him.
I guess what I'm more so getting at is like if I'm, a typical sort of use case for me using AI, if I'm asking questions, I'm typically going to apply those responses in a similarly sort of automated way. Right? Like I think one of the challenges is it's almost like you're blending like the example that Michael used earlier about me doing my own taxes. Like if I'm educating myself and I like having the levers in control, I want to be doing as much of it myself. Right? I'm not going to then go to an accountant and say, "Hey, I've educated myself on all these tax forms and I understand what deductions I need. Can you do that for me?"
And I figured Kyle was going in this direction. I figured you were taking in this direction from the beginning. Like, what point at that point does the broker, what role does the broker serve at that point if the client is coming to the broker already educated?
Or they perceive themselves to be educated and they don't perceive, to your point, Andrew, they would perceive you as challenging their assumptions in education. If they're coming to you and you're saying, actually, that's not true, they're going to say, wait a second, I've asked ChatGPT and ChatGPT said I need that, right? We already see that in healthcare, right? That's a huge challenge for doctors, for physicians, because patients are educating themselves online with WebMD and then they're going and saying, hey, I've got whatever, type 2 diabetes. And the doctor's like, wait a second, like, let's pump the brakes here. You don't need this medication. And they're like, yes, I do. Prescribe it or I'm going to go next door. So
that I think is, like essentially, I see your point is in that case, but I think that's where the experience of the doctor comes in, right? And say, hey, you know what, these are the reasons why you shouldn't be taking it, and we as professional needs to provide good
So
advice.
look at it like a second opinion, right, Andrew? So
Yeah.
basically, the doctors are the brokers going to give you that second opinion, number one, and they're going to execute on these things. Like, the AI is great at telling me I need, tenants legal liability insurance. Okay, now what? Where do I get it? Who do I get it from? How much should I pay? Like, yeah, you can continue to prompt AI and go down further down the rabbit hole, but you need a second opinion and you need someone that can execute on it. So I think that's what the broker can do. They can execute on it. And if you think about, let's, playing devil's advocate, do you need a broker to execute on that? Yes. Yes, you do. Because think about our process right now dealing with insurers. A lot of it comes down to relationship. How's your relationship with that underwriter? The relationship makes a difference in the response time, in the terms you get. And then when you get really complex, like putting layers together, negotiation comes into effect as well. So now you have all these variables that AI can't solve. AI has no relationship. AI can't negotiate. It could try, but it's going to do a terrible job. So you need that human in the loop to give that client the second opinion, to execute on it, to harness the relationships, to harness the knowledge they have, and to, as we call, wheel and deal and negotiate with the markets to get that optimal solution for the client. I don't see that changing.
I just think the way the direction of all these companies are going is that, I mean, listen, I love AI, I love technology. That's why I do what I do. But the thing is, I think the differentiating factor and for these companies will be that person.
And a lot of people want to deal with humans.
They'll be
That's
picking up the
that
phone
too. Think
and
about it. Yeah, we like, you mentioned you want to go on an app and deal with do it yourself, but Andrew wants to call someone. And there's lots of people like you, Kyle, and there's lots of people like Andrew. And it depends the product, depends the type of person they are, but there's still a lot of buyers that are going to want to pick up the phone and call someone. And like they don't have the faith in the technology. They're skeptics.
because listen, if there's a problem, I want to talk to somebody.
Yeah, that's another thing too. What happens when things go wrong? And insurance, we know things always go wrong. There's a billing issue, there's a claim, there's anything that happens. All of a sudden, their business buys another business that does this new operation. There's all these points, and now what am I going to do? I need to call someone and say, help me. I've just acquired this business, and they're doing operations in Mexico.
Yes,
I need
and I
someone to
think
help me address that.
like exactly like what you're saying, Mike. I think insurance is one of those things. It's like when you're calling a doctor, you don't want to reach an automated doctor. I need to see somebody. I need them to look at my leg and see what's wrong with it. I don't want to see like sure there'll
So the
be
challenge though, Andrew, is there's multiple studies now, and I'm sure we've talked about this already, where people were given a real doctor and an AI based doctor. And overwhelmingly, the patients voted that the AI doctor had better bedside manner and they had a perceived more accurate diagnoses than the real doctor.
Yeah, I've never read that study, so I can't confirm that
There's a
study.
couple. I'll put it in the show notes. But
Yeah, put in the notes, but I wouldn't doubt it. Some of the prescriptions we get from our doctors. Sorry, I don't hate to bash our doctors, but some of it's just bad.
Well, I mean, listen, is it now that opens up a can of worms, guys? Is it because of the doctors that are available for us, or is it because of the experience of the medical system outside of the country where you do pay? It's going to be very exceptional, right? Like
Yeah, it'd be interesting to know where the study was taken.
is
yeah,
in
yeah,
the US. Yeah.
yeah.
In
I
the
would be
US.
interested to know
Wow.
where it's available and the cost of living around that area as well, and the individual they've interviewed because different experience will have different people and different social economic class will have a different experience with certain types of medical system as well.
Yeah, and there's diagnosis and there's treatment. So remember, we got to differentiate those two things. Same with our businesses. Diagnosis, you're right. AI is like getting phenomenal at, but what about the treatment? Who's going to do the treatment?
Well, overall, like I think the AI is I don't know, like it's just there's obviously advantages, but I just think having the full flow being completely automated through AI is a bit not personal. I just feel people as individuals still care about that personal touch. Maybe that will change down the road, Kyle, like you're saying. Maybe everything will be automated and it's so convenient that I don't need to talk to somebody. If
Give them
it
the
gets to
best of
that
both
point,
worlds.
then
The
yeah.
answer for now is the best of both worlds. Give the that person needs to have the technology so they can give that diagnosis that's like spot on, and they can give the client that experience, that fast pace experience that they want, but they can also do it at a high touch rate. So I don't know. That's our position right now. That could change in 5 years, but as of now, we definitely see human in the loop is necessary, and technology. You can't really have one without the other in a sophisticated product.
But and you're saying again, it's not dependent on the technology, right? Like the human in the loop ultimately is just it's a tool. It's a sort of an enhancement for that typical sort of relationship versus if you are doing a process that's entirely electronic, like you're talking to an AI, the AI is transacting for you, you're hitting checkout or whatever on your phone. There is no human involved. It's doing that entire process. And so I guess just in summary, like it sounds like you guys are saying, we are definitely focusing on the business end of high touch, high value, people that want to communicate with individuals, people that have are open minded. They can be sophisticated ultimately, but there's probably a more likely match with people that are saying, "Hey, I have an issue, I have a problem. Diagnose this problem, find that solution for me," and then technology kind of helps, automate or streamline certain things around the edges. Whereas if you're comparing yourselves to a fully electronic brokerage where at most somebody's going to talk to somebody at a call center, if that, there's typically going to be chat interfaces and stuff like that. It's going to be a very, very different experience, and there's not going to be a lot of selection. And Andrew's point, the underwriting is very basic, and if there's issues, then it's kind of like an if and when solution rather than like let's try and get ahead of that. So is that in light of that, and if that's accurate, if you guys feel like that's accurate, how are you guys, I guess as sort of a final question, because we've been cooking for a while, how do you see that applying for future generations? Like, how do you see in 20 years you guys differentiating yourselves from that other option?
Good question.
So you summarized it well. There's definitely a delivery for each type of customer. So certain customers will benefit, like I said before, I know I sound like a broken record, they'll benefit from that low touch point, really automated purchase experience. And there are companies doing that right now. It's just a different product they're selling. Right now, I'm looking 5 years out, but I'm going to try to expand my horizon to further out, like you've asked, because for the next 5 years, for that sophisticated product that customers are buying, they still require the human the human touch. However, yeah, let's look out 20 years from now. 20 years from now, you're saying what will it look like at that point? This Gucci experience?
Yeah,
Well,
and
will people
in
stop going to
comparison
Gucci
to where
stores in 20
where
years?
we think the alternative will be in 20 years.
Do you think people will stop going to Gucci stores in 20 years? So, or will, let's ask this. If you go into like a Prada or a Gucci, Hermes, will it be staffed with robots in 20 years?
Arguably not, right? Like again, if we look back to what Andrew's point was with Whole Foods, which was I think a very valid one, is if you want high quality, you want reliability, you want trust, high trust transactions require people, right? If you, for whatever reason, you're a Luddite, you don't like the technology, you don't want to use it, you don't trust it, you're not going to tolerate high service via, a technology. And I would apply the same rationale to AI chatbots. I think if I wanted to deal with a human, I would need to deal with a human. Like, let's look at legal. So legal is an interesting one as well because there are a lot of applications that right now lawyers and legal professionals are doing that can very easily be automated. A lot of conveyancing, a lot of transactional services, contracts, stuff like that. It is a commodity, and the end output is very easily, let's call it reviewed or parsed by the buyer. So if you do a really, if you execute a contract correctly or you don't execute it correctly, it's very easily to discern that by the buyer. However, there are also other legal services. Litigation is a big one, where it is a total intangible until the outcome, right? If you hire a good litigator or you hire a bad litigator, you're likely not going to know as the buyer until you have a good or bad outcome at trial. And there's absolutely no way, if I were being faced with that problem, that I would choose to roll the dice with low trust, high automation, let's call it a robot to run that sort of a process. Whereas if again, you need that high trust, you need that sophistication, you need that experience, there's absolutely no substitute for people and no amount of technology. Yes, it would help to, bookings and, obviously they need a phone and stuff like that. Like there are certain amounts of like de minimis technology that's required, but like if I'm going to trial and I want to talk to my lawyer, some sort of, let's say a patent application or something, and we're doing something creative, no amount of technology is going to replace that. That's at least my view. So I think, yeah. Anyways, what do you think,
Yeah,
Andrew?
give advice to if we have to look at the future generation of human workforce, I think it's going to be they're going to have to really focus on the strengths of humanity. It sounds cheesy, but like those human elements. So think about relationships, human connection, problem solving. If they're really good at those things, I think there's still going to be a need for them in many industries. In particular, our industry, like being a broker, that for very sophisticated products, that'll still exist. I don't doubt that, but there'll be less of them, and they'll be like experts, either experts in a particular field, and they'll have to focus on being really good at nurturing and developing relationships, building circles of influence, building relationships with large affluent networks, and really good at delivering good customer experience and solving problems. And I think if you have those things, you're not going anywhere, in my opinion. And those are the people that will continue to thrive. What do you think, Andrew? And
Uh, I think right now, yes, that this is the case, and and this, I'm a strong believer in that right now at the moment. But um, I'm not to say that AI is going to change in the future, and I'm 100% confident that it will change in the future. And at some point, if I can distinguish it between a human or a machine, then maybe that's the point where I'm comfortable with using interacting with machine completely 100%. But I don't know how far that is down the road. Like that goes back down to this question, and this question that has been going on for a very long time, the Turing test. Has AI been capable of passing that Turing test? And if I think it's getting close. I think it's probably either passed it already or getting close to it, and it's just going to continue to surpass that, that test, right? Like it's becoming more and more human, and
you guys got to realize, though, humans crave connection. I don't know. I don't foresee AI filling that gap. And maybe they'll get connection in other ways and not through their business dealings. However, if you're not getting human connection through anything you're doing, everything is through the computer or AI. I don't know. I think we'll have a host of other
So
problems.
yeah, so Kyle, like, do you know what like that is? Like, what's the current state of that Turing test? Has the machine actually passed this test? I mean, it's that's a big question, and I think that's a big milestone for machinery.
Yeah, so I think we're way past that. So my understanding of the Turing test is simply that the subject, the human, is essentially like the doctor example, where can they determine whether or not a machine is a machine or not? And
Yeah.
if the human perceives the machine as being another human, then essentially it's passed the test. And I think we're past that, especially with regard to some of the models that incorporate voice. It's in my mind, it's totally indistinguishable. Like if I'm talking to Grok, or one of the OpenAI models via voice, like it's totally indistinguishable. Like again, you're talking about like like there's a little bit of latency, or there's certain things here and there. Like if you're really looking for it, you can try and decipher it. But like I think we've all read about examples where people are using it to defraud, staff, where they're essentially using the leadership's voice or the whatever likeness, and it's passing the test every time. So yeah.
So if it's already passed the test, it took us what, 50 years to get here, right? Since the test, like since the Turing test, took us 50 years to get here. And if it's already past this stage and it's constantly improving, I think the first time it passed, or someone somewhat made some passes on some individual is 2014, I believe. And then I think, after with ChatGPT and everything like that, I think you're right, like it's indistinguishable now. And it's going to continue to go vertical in terms of development. And yes, so in the future, I have no doubt that maybe I'll be interacting with an AI agent that will take care of all my application, right? That's still the bespoke experience I want to have, whether it's a machine or a person. I want that. I want this thing to do all my essentially interaction with all my applications. So,
You want a
you
high touch AI.
high touch AI. The high touch experience still has to be there. I still want that experience, but I want the AI to do it. And now, if someone comes up with that first, essentially, in my opinion, like Michael, what I said earlier, Uber bringing personal driver to the mass. That's a big market.
All right. Well, let's leave it there. Thanks for joining us. Lots to talk on next week as well. So we look forward to chatting more about it next time.
For humanity.
Thanks all.